And we have Jing Sun, co-founder of IoTeX and MachineFi Lab. Thanks for joining, guys.
Thank you.
Yes.
Awesome. Can you just start by introducing yourselves and what attracts you to this real world and Web3 space? Maybe starting on this side with Jing.
Okay, hi. Can you hear me? Good? Okay. Hi, everyone. First of all, thank you so much for coming today. I think today we will have a really interesting talk and discussion. My name is Jing. I'm co-founder of IoTeX and also MachineFi Lab. So some of myself, actually, I'm a venture capitalist turned, entrepreneur in Web3. I spent 10 years in Silicon Valley, investing all those cool ideas, frontier tech. Until 2013, I really start to look at crypto, which is Bitcoin. In 2015, start to get into the Ethereum space. Since then, I never kind of move kind of behind, and then really kind of 100% get into the crypto. My journey, what attracts me to Web3, I think just like I started from seeing just like Web3 provide this, it's kind of open source and the composability part. It really kind of drive me into the space first, because when I'm investing in all the other kind of Web2 company, I realized actually all the centralized big players, they already kind of control all the access to the data and all the access, to the users. And then just leave a very little space for the innovators really to innovate. And then until you will see, by default, all the Web3 technology is really about open source and gives open access to all the builders. I think that's a very big benefit to the Web3 space. And then just move to the other spaces, we realize about the user ownership. We realize about, the graphically, guaranteed, kind of trust minimized mechanism. All those kind of come into the place, open up, a new innovation space for all the builders and young kind of, entrepreneurs. I think that's what attracts me to the Web3 space.
Awesome. Thank you, Jing. Mike.
Yeah, thanks for having me. My name is Mike Zyko. I'm one of the co-founders and partner at Lattice. We are an early stage venture fund, founded a little over a year ago. We raised our first fund last summer and then recently announced our second fund about a month ago. Prior to starting Lattice, I was the head of sales at a company called CoinList, which was a spin out of AngelList, primarily focused on what were ICOs, but token sales, and we worked on a bunch of the largest ones over the past 4 years. So things like Filecoin, Solana, Flow, Blockstack, Celo, mostly layer one blockchains. In terms of what kind of attracted myself and my partner Regan to this sector of Real World Meets Web3, I guess we have it here, is when we saw Helium emerge in, I guess, 2019, 2020, and it was this very novel use case for incentivizing coordination amongst humans in the real world to actually do something. And that hadn't really been done quite on the same level, or at least not that we had seen. So you have things like Bitcoin mining, but it's largely about running software for consensus, but actually incentivizing an action in the real world that has some theoretically useful real-world impact was pretty new. And what was cool about it is it brought in a totally new audience that I think prior to that, they were like, that was their entry foray into Web3. It was not like, oh, I came here to buy tokens and flip them or buy NFTs. Like they were super interested in wireless and just this kind of broader vision of forming that kind of network. And our thesis at the time was that there would be other entrepreneurs that had domain expertise that would choose to use a similar model to bootstrap supply. Now, I think one of the biggest challenges with Helium, obviously, is like, and I guess we'll get into this later, is like the demand wasn't there, at least initially. But that there would be other applications to this, and I think we're starting to see that today, and a lot of projects that will launch this year, including a few that we invested in. So it's going to be an exciting year. I think it's definitely going to be one of the sectors to watch in the year ahead.
Awesome. Excited to dive deeper into those perspectives. And Raymond, please introduce yourself and what attracts you to Web3.
Yeah, hi everyone. I'm Raymond Liao, one of the founding managing director of Samsung Next Ventures. So I've been with the fund for 10 years. Right? How we got into Web3? Actually, we got in before there was a Web3. All right. I mean, for us, it's always saying, okay, I invest in infrastructure, edge computing, very natural because of 5G, and the Samsung, synergy, right? Edge computing, AI, all those things. Then we start paying attention. Oh, there's someone, printing out a crypto kitty, and some other people are willing to spend, a few $1,000 to buy those stuff. All right, and then they almost, crashed Ethereum, and they have to, develop something to fix that. That's how we start getting ourselves into, oh, this is very natural. This is going to be basically the application on top of edge computing. When you think about it, right? It's basically the whole stack. So for us, it's very natural for us to get into this space. So been investing in this space for the last, the 6-7 years, right? And these days, we make one new investment per week, and about, I would say 30-40% of the deals are related to Web3, full stack. Right.
Awesome. Raymond, I'm going to let you expand on that a bit. Samsung Next invests broadly in verticals like digital health, fintech, metaverse, media tech, all across the board. So you have extensive experience investing in both Web 2 and Web 3. But I remember one of the articles you wrote said you believe Web 3 will transform many verticals in the coming years. What problems can Web 3 solve, and how can Web 2 and Web 3 work together?
Yeah, I think there are some very hard problems, right? I don't care whether it's Web 1, Web 2, or Web 3, but there are some very hard problems. One is data sharing, okay? There's a huge appetite, because of machine learning large models, there's huge appetite for data, right? But the reality is that people see the success of big data hoarders, so we're not tolerate that to happen again. So you will have basically data silos. Okay, so then how do you solve that problem? Okay, so I believe Web3 will be one of the key components for that. Okay, that's one problem, right? The other problem, I'm pretty sure Michael is going to talk about it as well, is when you have some expensive infrastructure you have to deploy, you have a chicken and egg problem. Okay, think about early days of IoT or 5G today, right? Who's going to build it? Who's going to spend money to build it, and then who sort of really say, think about the coverage before you even see a dime come from it, right? So that's a hard problem. Yeah. So things like that, we think Web3 is actually offer an elegant solution here. Okay, it's non-trivial, by the way. It's not just you can print your money, then you can solve the problem, right? You have to be careful. You have a window of time to solve that problem. Then afterwards, you need to think about real utility very fast. Right, to basically think about the demand and the supply very fast. Yeah. You cannot just ride on your success of launching tokens, but after half a year, then that seems dissipated. Right? So those are just two examples of some of the hard problems that's really true utility for Web3 approaches.
Awesome. Yeah, we'll dive in a lot more into the demand side. That's going to be a theme of our panel today. But Mike, Lattice is a pioneer investor in this real world and Web3 space. You've written extensively on this new category of use cases that directly address what Raymond is talking about who's going to build the physical infrastructure. You define it as Tipin, or token incentivized physical infrastructure networks. Can you explain to the audience what Tipin is to you, and what your thesis is for Tipin, and why you're bullish on this category?
Yeah, the name is pretty self-explanatory. Hopefully, we're just looking for a clever acronym, and hopefully found it. Although there's I guess definitely a few examples already out there. You mentioned proof of physical work, and people have talked about this EdgeFi or DY. Thematically, blockchains have largely been this coordination mechanism. So you have a financial incentive that allows people to be coordinated in a trustless fashion around the world. And obviously started with Bitcoin, but it's being applied in various capacities. And in this case, like, why would you not want to coordinate humans around the world for some hopefully common good, something that can improve the world, or at least allow people to share in the upside in a different way than corporations are structured right now. So that's one of the interesting things here is, like, you've looked at some of these networks and I think you'd say, well, this maybe isn't too different from what we have, but it's definitely a different way of presenting businesses to the world, where there's participation that can come from anyone and not just kind of one singular entity, and there's advantages that can come along with that, along with disadvantages. I mean, it's harder to coordinate a bunch of people, but the only way you can do it is generally with the token. In terms of why we're bullish on this space or why we want to invest in it is, as investors, you're generally looking for what could be the next big thing, and this is an underexplored area, and it's underexplored largely, I think, because it's much more challenging than launching a new DeFi primitive, which is largely just based on software. Like, actually, you still have a supply chain, you still have to find manufacturers to produce this hardware. So it does make for a more challenging space, but in our view is, one of the things we talk about is, like, helping teams build defensible moats, and I think in this space, if you can get this right, the likelihood of a long-term defensible moat is much greater than somewhere where a protocol can be easily forked and brought to a new chain or tried elsewhere. So that's one big piece. The other one is we look for novel token distribution mechanisms that get a constituency involved in a project that isn't tied purely to buying the token on an exchange and then just kind of waiting to see what happens next. So somewhere you actually get participation, we think is a much stickier community, people that want to see the growth and success of it over a long-term time period. Because there's one thing just like invest in a token online, it's a whole other thing to actually go out and actually start to work for it. So that's another important attribute that we like about this Tipin sector. And then broadly, it's just like there are things that probably couldn't be done before. So in the case of DY, getting all these 5G cellular radios into various homes and small businesses and apartments all around cities, like Verizon's not very easily going to be able to do that. So it presents unique paths to businesses that we haven't seen before, and I think most likely with experienced entrepreneurs from very specific sectors, you'll start to see more examples of this in the future. So yeah, I think the next year is really awesome.
Awesome, thanks for the thoughts. And Jing, as a former managing partner at Sparkling Capital and accelerator lead at MachineFi Labs, you've seen the real world and Web3 sector grow firsthand for the past several years. What is MachineFi, and why is this an important sector to pay attention to?
Yeah, actually, just like, when you look in the past, how the Web3 evolved, we will see, starting from 2020, which is the first wave of the adoption, for Web3, which is DeFi, right? And then just like followed by the GameFi and NFT. So we see all the potential is like, we see blockchain and Web3 as a kind of trustless infrastructure. It's really good for the financialization of certain things. And starting with kind of, all the virtual activity, all the asset, right? And then just like, when you look at how the value already created, for DeFi, it's only kind of, 100 billion. But when you compare it to how much value can be created in the real world, which is 1,000 times bigger, but actually all those values haven't really be, even have the potential or have the possibility to be unlocked in the Web3. Why? Actually, just there's a missing link. The missing link, how we can get those real world, data, information, insights, or even just like the infrastructure, the utility, right? The public utility, into the Web3 as a missing link is we see it's machines and devices. So machines and devices, just like the edgefi, just like Mike talked about the Tipin, and then there's other edgefi. So they are, the devices and machine are on the edge. And they are kind of the missing link to connect all the information which happening in the real world and get them into the Web3. And then it unlocks all the possibilities for the Web3 developer. They can create all type of applications, all type of network, and then really leverage on advantage of Web3, which is the best kind of trustless financialization engine, right? So that's actually the reason back us to look at how actually we can unlock the connect the real world into the Web3 and then help unlock the possibility and value on the Web3. Yeah.
Awesome. Thanks for the high-level thoughts, guys. And there's a lot of experience and insights in there that we want to unravel a bit. So we're going to talk about use cases. The real world and Web3 space is gaining traction now, largely due to the availability of new technologies, horizontal technologies like decentralized identity, so you can trust your devices, oracles, so you can accept data from those devices, off-chain computing to transform that data in a way that's useful for DApps. And that applies to a lot of vertical industries across healthcare, connectivity, automotive, and more. So I want to shoot this question first. Let's go with Mike. You touched a little bit about this, but what types of these real world and Web3 projects do you think will create the largest value from both the infrastructure perspective as well as the verticals perspective?
Usually start with the market, so where are the largest markets that people are going after? So of the teams building in this Tipin sector, proof of physical work, the wireless space is definitely probably the largest. I think in the US, something around $260 billion spent on wireless connectivity in some capacity. So it's just a massive market. At the same time, one of our investments is a project called Demo. They're similar to Helium in the sense you plug this device into your car, it starts to collect telemetry data on the vehicle, about the battery, about the health of the car. And when you look at that, you say, okay, well, what is the predefined market for that data? There's not necessarily, there are buyers of it, but in their case, they're introducing a new developer platform which other teams can start to build on top of. So you can think of insurance. Every car begins to have an identity, a wallet connected to it. So if you wanted to ever do a decentralized Uber, this would be a great place to start because now all vehicles have an identity. So that total addressable market, to a certain extent, is undefined, which can be really interesting because a lot of things can happen with the imagination of other entrepreneurs that might build on top of it. The other project we invested in is in the energy space. Clearly, a very important sector for the world, just from a climate change perspective. So what they're doing is a virtualized power plant and trying to incentivize home battery usage. So putting a Tesla Powerwall, for instance, in your house. To date, the idea is if you can concentrate enough density of batteries amongst a group of houses, you can turn it into a power plant in and of itself. They store energy and become a grid supplier. So there's a natural demand source for that. So far, the only way you've been able to do this is on a more kind of industrial level, going to a Home Depot that has a bunch of batteries. It's hard to get these like mid and long tail assets to aggregate because there's no really good incentive for them. So this is the first time that using a token that you'll be able to go after this long tail of batteries, which actually comprises a much greater footprint. And the expectation is not that you can just go after the existing batteries in the market, but more people might become interested in having this because there's just a new way to participate beyond just storing energy for your own home. So those are just a couple of the investments that we've made. But like if you were to purely look at where the biggest opportunities are, I think just by virtue of the fact the market is so large, wireless is clearly one of the biggest spaces to get into at this moment.
Yeah, for those that are in the DeFi space, these crowdsourcing of liquidity to form DEXs is kind of similar to what Mike just mentioned about the crowdsourcing of physical assets or data, where you can become a shareholder in these ultimate products. Raymond, you know, the growth of the real world and Web3 sector is coming from all angles, both from crypto native applications and also new Web2 entrants. Where do you think the growth is going to come from, and are these two sides going to play nice with each other?
That's actually a very interesting question, right? Right now, I would say the large enterprises, they have actually gone through the early days of, basically kick the tire. They experiment on some permissioned blockchain in various industries, right? I think they are waiting on the maturity of a ZK proof, okay, before they come to public permissionless blockchain. Okay, I use this analogy very often. It's just like the early days of internet without VPN. No enterprise will come. Once you have VPN, you have suddenly all the intranets flourish. Okay, and then you don't even talk about whether it's Web 2 or Web 3, but they become one thing. Okay, so we are at that tipping point. Yeah, so I mean, you can see some of the, I would say when IBM, they started Hyperledger early days, there are a lot of experiments, right? With, for example, Maersk on the marine shipping, very, very concrete of use cases, because you are replacing fax paper, right, with modern technology. You can find many of these use cases that's fairly concrete. They're waiting on the sideline right now. Right? So to me, I wouldn't say whether it's Web 2 or Web 3. I would say I'm bullish on the next wave of enterprise adoption of, you can say Web 2.5, right? To some extent, DY, you can say, is that Web 3 or is Web 2.5, right? They're solving a problem in actually Web 2. Because at the end, who's paying this? Who's bringing the traffic? They're the MNOs, the telcos, because they own the customers. Okay, that's one thing. I mean, in business, we always need to remember who owns the customer, and the customer acquisition is very, very expensive. Right? They bring the customers, yeah, to your doorstep. And when we started DY, for example, we cannot afford to, because we don't know who is coming to our door, right? That's why it's important. That's why I would say it's probably more healthy for us to think about, in my view, this Web 2 and Web 3 will merge.
Absolutely. Regardless of Web 2 or Web 3, there's a need for infrastructure to enable these new ideas. So I want to share this question with Jing. What types of middleware, tooling, layer 2 protocols, et cetera, do you see as critical for the advancement and growth of this sector?
Yes, that's a really interesting question, right? So when we kind of look back, 2017 and 2018, we see all the projects are doing the layer 1, right? So all the investment and all the best technology, they are doing the layer 1. And now, I think we have enough layer 1s. And I think that layer 1s are the only kind of, I think the major, technology which we already have the maturity to really enable, builders, they can create things on top of it. But what we're missing here to kind of really unlock the real world use cases are middleware and also layer 2s. So what does it mean, right? So when you look at the kind of the channels or, from the real world to the, the blockchain smart contract platform, which is a layer 1, actually they cannot really directly connect to layer 1, right? Layer 1 is more like you can consider this is a consensus layer, a transaction layer, token issuance layer, smart contract platform, right? But what really kind of leaving a big space for the innovators to, work on is the middle layer. So what type of middle layer, right? When we look at the kind of real world to the Web3, definitely there are several things that are really important. First is the device onboarding, right? So how you get the device really on board, with easy way, to easily kind of connect the devices from the maker side, from the manufacturer side to the user side, right? So I would say the DID, device identity, in layer will be super important right now, and it's still missing. We already have some innovation there. We see maybe the DID for the, for the people, for the users, for the kind of the social purpose, but we didn't see kind of the DID specific for the device. And another layer, very important, is about the off-chain computing, right? So we talk about, on-chain, but there are a lot of computing. Actually, when we're talking about the, real world, there are much more data which cannot really be, directly compute on the layer ones. So a lot of off-chain computing, will be on the off-chain side. And there's another big missing part will see the, of course, the Oracle, right? So Oracle and, off-chain computing will be together very important, middle layer we are missing here. But there another one, I think not, we haven't talked too much or enough, which will be about, how to make the data useful. So we are talking about the raw data, metadata. We get the data, from the devices, for example, or from the edge, right? But not all the data are really useful. We are not talking about we just like literally do the data monetization on the chain. We are talking about actually we want the useful data or the insights or even the proof. The proof of data is important. And then just like we need a layer or the middleware layer which really makes the data useful or really gets the, useful proof into the smart contract. We see this is also kind of a missing component. Still only a few kind of projects are doing that, leave a big space. So I would say just like these four to us, really kind of a big opportunity here.
Yeah, as this new infrastructure becomes available, new applications will be built on top of it. They'll demand more from the infrastructure, and that's where this application infrastructure lifecycle really comes into play.
I would add to that definitely that, just to get the conversation going a little bit, if you talk to most of the founders today building, they'll probably tell you they're doing very little of this on-chain. So in the case of wireless, Helium's going from an L1 moving to Solana. Solana's obviously had troubles with uptime over the past year. If you're a wireless network, having problems with uptime it's not really acceptable. So clearly, they have to move more of the business off-chain, and maybe it's just the token incentives in that coordination piece that's being done on-chain. So, to your point of the applications pushing the infrastructure and driving developers to see a use case, I think that's going to happen this year. Data is probably the biggest piece right now, but data is a big thing in all of crypto. So they can leverage a lot of the existing builders there. And then the other kind of interesting aspect of this sector is if you go to, let's say, a Helium house, an entire ecosystem has developed around them. So you have hardware manufacturers, deployers, people that go out and find real estate, software developers that help with the optimization of hotspots. So you're getting an entirely new sector that probably won't interact totally with the rest of crypto, but will service all of the nascent needs of these physical world networks.
Yeah, the ancillary services are really interesting to think about. I want to jump into a new topic, and we touched on this a little bit. It's about token design and sustainable growth. Over the past 2 years, we've seen a lot of innovation in the tokenomics related to Web3 projects, and some of which that incorporate smart devices. But one unsolved challenge for device-backed Web3 networks is how to create sustainable demand. It's become very easy in retrospect to imagine how we can build massive supply side just by giving tokens for very simple actions. But how do you convert that into something that has organic, sustainable demand so you don't have to inject incentives over and over to make these networks stand up on their own? Just like Uber bootstrapped their networks by heavily subsidizing both drivers and riders, many projects have successfully used these early adopter token incentives to bootstrap the supply side. However, the flywheel can only work if there's sustainable organic demand for what the network is actually producing from their services or their utility. So this is an open-ended question. I think everyone has very broad thoughts and this is really what's going to unlock the next level of innovation for this real world Web3 sector, is where is the demand? Mike, maybe we could start with you on this one.
Yeah, as early stage investors, and at least in terms of the token design, like I wouldn't say initially that's something that we're getting into, because it's more about finding some semblance of product to market fit and finding demand. Because you can design a token around the demand, but like if there's no demand, you can only masquerade so much before, or come up with a bunch of fancy schemes before eventually like the token's going to decline in value, because no one needs it. Helium demonstrated that you can bootstrap massive supply. They're up to around, I think, a million hotspots at this point, and there's been a lot of FUD recently around the demand for data credits. Although I read recently they've actually increased over the past few months, so that's a good sign. I think if you talk to most of the founders building today, like they are much more conscientious of thinking about demand and also not allowing for runaway growth on the supply side before demand is commensurate with that supply. Because even if you look at in Helium right now, they spent around 50 to 60% of the token supply on incentives already. So if you look at the future growth of the network, it's like, well, you've already gone through a bunch of bullets. Like if you want to incentivize people, and now they have these new sub-DAOs that are focused on wireless or 5G, it's like you only have so much of the token supply left to do that. So I think founders are much more conscious of it, and if you talk to investors like ourselves, like we are asking much harder questions of founders of where does that demand come from, and it's going to be unique to each space. Like it's either unlocking new markets because you're doing something that just couldn't be done before because it's enabling something new, or you're offering a much better product or service to the existing demand that's already out there. It's not rocket science, like there has to be a buyer. Is there a buyer today, or are you creating something that's totally new that you expect them to come? I think the other piece of this, I get into conversation a lot with folks that are like, oh, like, does anyone actually use these things? And it's not too dissimilar from a lot of crypto. There's, how many layer 1 blockchains are out there with very little demand for block space? But it's a very esoteric concept, thinking like, oh, like block space, how many people are using it? But with the wireless network, I think for like the average citizen, because these are, okay, I use a phone or I use home internet, it's easier to understand that concept. So I think that's why they get a little bit more criticism for there not being as much demand for whatever it is that they're supplying. The final piece I'll add is, in the case of Helium, because they're kind of, they were one of the spearheads of this sector, and I think they bear the reward as well as probably some of the criticism. It's still early, like without global coverage from an IoT perspective, like a lot of developers might not have considered building something there. So I don't know if this is the case, but I think some people believe that now that they have this blanketed coverage on a worldwide basis, there will be more use cases that come out because people recognize it's there, they can build for it. Just like Ethereum, it's like there wasn't a lot of demand for block space, but it's like, okay, developers saw that it was there. It's like, okay, like we can build applications for it now because there is this decentralized smart contract platform.
Absolutely. Raymond, what's your perspective on the supply-demand challenge, and how can builders in this room think about how to make this flywheel work over time?
Yeah, I agree. I think on the supply side, it's relatively easy. You use, tokenomics to incentivize supply side, right? On the demand side, I tend to think about it as consumer use case first, and then enterprise use case. Okay, for consumer use case, there are a few successes, right? You talk about the Axie Infinity, right? Play to earn. They clearly use token to generate demand, right? You talk about the Tipin, move to earn, same thing, right? But there you have to be careful. Your success may become also, the problem down the road when there's so much speculative, investment coming in, increase the token price too much. Then of course, headache, because then the economics is not right, right? And then after, the market tanked, then it's even worse, right? So you need to, that's actually, I don't think there's an elegant solution there yet. People are still trying to, navigate that, figure it out, all right? Is how do you design the tokenomics, how many tokens you even need, in what kind of incentive structures, you navigate or adapt to the market changes, okay? So at least there are cases that you can use tokenomics to generate demand. That's more for consumer side, okay? And I tend to think about, okay, when you design consumer applications, treat it like a game, okay? It's not a one-time engagement. You have to continue to think about how you continue to get, the player, your customer, engage with you. Okay, you have to continue to evolve, adding new features. Okay. Then on the enterprise side, I think my view on that is the demand will be depending on you solving the hard problem that's already there. Okay, there are hard problems already there. That's why people talk about, okay, you cloudize, you can transform a traditional vertical market. There are already a lot of problems there, right? I think there, my view is that you can use tokenomics to encourage the collaboration across the value chain, the collaboration between competitors. Then you can make the market bigger.
Absolutely. I think Raymond made a good point around sustainable growth of the supply side. It makes it easier to fit the demand side. So we saw the epic rise and fall of Tipin, who built the supply side maybe too fast, too quickly before thinking about the demand side. Jing. Yeah, of course.
Yeah, adding to the point, because this is actually really important, questions. When we talk to any builders, actually, just like we ask them a question, I think probably just like you need to think what you are doing, think from the demand side first, then supply side. Demand side, the problem is when you look at all the problems of the market you want to, tap into, right? The first question is, do you see actually this problem have a huge demand side, but actually not really have the enough kind of supply side? If you can find such a market, the demand side is huge, but because of the lack of the scale of the supply side, so that this market haven't really been unlocked. And probably this is a very good kind of market that you should look at. Because just like Raymond also mentioned, token incentive is a secret weapon, really easily to help you scale the supply side, right? But the problem is, sometimes you are kind of maybe solving a wrong problem. In the real world, a lot of things, they already have enough kind of supply, but they are also looking for demand. If that's the things, in the real world, they are not the market you should go after. But actually, when we are working with a lot of, for example, device makers and those players, right? We see there are a huge kind of potential with a lot of the device makers. Their problem is they are hard to scale. It's easy for a device maker to create a kind of 100,000 device users, and then they just like build on top of that. Maybe they will spend 10 years to get to 1 million scale, right? But even just like upon these 100,000 devices, they already have the demand side, which is the device data or insights are really valuable. So they want to solve the problem and say, hey, how I can really kind of get into a 1 million or even 10 million device users, scale it, right? And so that the data value or kind of the utility value will be kind of 100 times bigger, because it's not like a one-on-one. It will be kind of just like compound type of the value demand will be coming. So that I would say the biggest, the best kind of use scenario will be you need to analyze the demand side first. If there's a huge demand, if you do kind of the scale, and then that's the market you should tap into.
Yeah, we operate in a very interesting industry where as the number of devices grows linearly, the value of the footprint of the devices grows non-linearly, because there's network effects in the data, in the connectivity, and all the things that these devices produce, right? We've gone through a lot already. This is going to be the final question, and it's going to be talking about the market and talking about what's coming next for 2023. Outside of today, when we got a little micro pump, thank you to the crypto gods for that. It's been kind of a bear market for the past 6 to 9 months or so. Everyone agrees that the macro environment is a little tough to deploy capital in, but what's your perspective on the current market and the future outlook for the Web3 industry? And are you guys still deploying capital, or what are your strategies as you enter 2023? Maybe we can start with Jing.
Yeah, definitely. I think, it's a microeconomy is a bear market, but I think it's a bull market for builders. So it's also the bull market for the long-term investors, right? So if you are one of them, actually, you're lucky. Actually, this is the best timing for you to build, and also the best timing for you to invest.
Yeah, I think from a crypto perspective, we're operating in pretty unprecedented times. I think everyone's talking about how many layoffs there are in tech right now. I mean, the fact that Facebook, Twitter, all these companies are going through layoffs is pretty unique. And I don't know, it's hard to say what that means for crypto, but there's definitely a lot of talent out there. So that's a good thing. And there's a lot of well-capitalized crypto companies that can take advantage of that talent. That for a long time they couldn't compete with a Stripe to onboard engineers, but now maybe they can. So I think from a talent inflow perspective, that's always a good thing. At Lattice, we're still deploying capital, though it's been slow for a little while. And I think, for us, the reason we think that is, if you look at the end of 2021, we were starting to kind of butt up against like the end of 3 crests of big hype cycles. So you started with DeFi summer in 2020, then you went to NFTs, then GameFi, then maybe I guess you got all the new layer 1 blockchains. And then after that, it was kind of like we hit a bit of a wall. There wasn't really a new primitive, there wasn't a new sector, and I think this industry is somewhat ADD in the sense they're always kind of like, what's the next big thing? And so this is a sector we think can be the next big thing. And what's interesting about it is that not only can a project have a lot of success, it has implications more broadly. So if you are actually producing on-chain revenue, because there is a demand side, then DeFi starts to make sense. It's not just about speculation or taking out loans in order to speculate. You can actually take out a loan against on-chain revenue. So we think there's applications that will extend beyond just this sector that take advantage of the infrastructure that's already been built over the past few years. Or one thing maybe is NFTs. So NFTs have largely just been people trading around JPEGs, but in the case of Pollen and now Helium, if you buy one of these hotspots or radios, there's an associated NFT that's included with it. So if you own the hotspot, you also own the NFT. So there's revenue that goes to NFT. So you can see someone say, oh, well, I'll lend against the revenue associated with that NFT because there's actually on-chain revenue there. So we think this can be a really bright spot in a down market, but it is definitely a challenging time for the space. But I agree, like it's a good time to be building, like a lot less noise. A lot of the people that were attracted to the space for the fast money, I think, have mostly gone away. So good time for serious people to build for the next big cycle.
Yeah, it's a great time for investors, right? Especially investors that want to invest in infrastructure platform companies, right? This is just like year 2000 timeframe, right? You tend to see that the application innovations tend to cool down quite a bit, but a lot of the serious builders come to the platform layer and also the infrastructure layer. By the way, the money is still there, right? The VCs raise a lot of money, right? It's not short of money here, right? And then also the other thing is that not just in the Web3, not just think about in the adjacent industries, right? There are some major movement that benefits small players. For example, think about IoT, right? What's going on right now is there's a new protocol called Matter that basically enable all the major players to start to interoperate to each other. The members are Apple, Google, Samsung, you name it, everyone. They start finally talking about the same protocol to interoperate to each other. That was the major hindrance to IoT, because everyone speaks their own language, intentionally, right? Now they say, hey, there's no need to do that. So you think about that hard problem is already solved, then what would, for example, IoTeX gonna be doing on top? It's much easier to do, right? The other example is think about AI. What's cool about in AI these days? No, yeah, stable diffusion, right? What is it? It's just AI generate contents. Who can use it? Everyone. Who can run it? Not just Google or OpenAI or whatever. Any small companies can run it. Because the model is small now, and it's very fast because of technology innovation. So there's gonna be, you're gonna see a lot of AI stuff getting into Web3. AI generated music, AI generated video, you name it. So that's great time for serious builders. Okay, again, think about the demand side, supply side. What is the hard problem you are solving?
Absolutely. Blockchain or IoT is kind of the technology to grab data from the real world. Blockchain as a technology to add trust to that data, and AI as a technology to extract value from that data. The Holy Trinity, you heard it here first. I want to give a really big hand to all of our investors.